everyone, a very good morning. You're watching Market Fatafat on ET now with me, Mubina Kabasi. Markets looking okay. We have given off those opening gains, but nevertheless still sitting on some minor profits at this time, gains at this time of time. 12,182 is where the Nifty is perched at. But as you know, Market Fatafat is all about flagging off those individual movers and shakers. So to do that, we have with us today on the technicals Gaurav Ratnaparki of Sharekhan, and from our research desk, Varun and Soumya. Morning everyone, and let's start off first with the metal stocks. The reason we'd like to flag these off is because Donald Trump has kick-started the new year on some positive news. He's announced that the US and China will sign the phase 1 deal of the trade talks that, by the way, have been on since last year, March 2018, on the 15th of Jan. So almost 2 years after he first triggered that trade war. Now we will be seeing the culmination of phase 1. However, it's not all done, because the phase 2 talks as well will then commence, and for that Donald Trump will travel to Beijing. Interestingly though, all of these steel stocks have seen a sharp dip come by just an hour after the opening of the trading session. Literally all of them, and especially the steel stocks which are now in the red. The ferrous space is still managing to hold on with some quantum of gains, but otherwise Tata Steel, Jindal Steel, even Steel Authority of India are all now losing 1% odd. So let's get in a technical perspective as well on one of these stocks. And Gaurav, Steel Authority of India, again, not really done much for investors in the long term, in the decade as well gone by. At 43 rupees, what would you recommend traders could do here?
Yeah, basically in case of Nifty Metal Index, we have seen good amount of traction in the last few sessions. However, in its recent rise, the index has completed an impulse on the upside. So it can go for a minor degree dip before it extends on higher from current level. So I'm expecting profit booking in metal space, specifically in SAIL. The stock is currently trading near 40-week exponential moving average and weekly upper Bollinger Band. So a minor degree dip back to its crucial daily moving averages is possible. However, on the downside, 41 to 40.50 is a good support zone to watch out for, and once the stock reaches over there, it will be an excellent opportunity to buy the stock from longer term perspective. The medium term trend for these counters are looking positive. So from medium term perspective, buy the stock near 41, and on the higher side, 52 will be the target to watch out for.
Okay, so that's the recommendation then on a Steel Authority of India. It's losing 0.25% as we speak. Okay, and Soumya, we just had the numbers for Maruti Suzuki and the stock took a sharp dip. So how were the numbers?
Mubina, talking about the December auto sales for Maruti Suzuki, the total sales stood at around 1.33 lakh units versus our poll of around 1.45 lakh units. Well, definitely this reflects a 9% dip in terms of our expectations versus what the actual number is. In fact, the exports were up by over 10%, while the domestic sales were up by nearly 3.5% on a YOY basis. So the slight dip or the contraction seen was on back of the fact that the numbers were not exactly in line with what the street was expecting or what we were expecting. Hence the dip, and now the stock's definitely trading lower by over 0.5%.
All right, so that's then Maruti Suzuki for you. It's taken quite a decline today in trade. Okay, let's move on and talk about another stock in focus, and that's CARE Ratings. Interestingly, Varun, we are seeing a lot of traction come by in all of these rating agencies. Is there any trigger of sorts?
Right, Mubina. So as you rightly said, all of them have been really active, all the various ratings agencies. Specifically, CARE has been up more than 50% in the last month. And if you look at the chart and you kind of just analyze what happened, there was a huge concern on the street regarding the penalty that would come to these rating agencies on account of IL&FS and other mistakes where they've rated paper in the past better than they should have. So there was a huge collapse. The stock used to trade at around 1100 rupees, which is twice of the low it made. So the market cap, even though from here it's around 3,000 crores today, it was around 6,000 crores pre the crash. And the company still has around 100 crore PAT, so you're looking at 30 times earnings on this counter. But basically, there was a notice which came out lately to the exchanges where they said that the IL&FS issue was now being dealt with as far as rating agencies are concerned, and the penalty for each rating agency was very minimal. I believe somewhere in the tune of 25 to 75 lakhs, but I mean, it was even less than a crore. So nothing that's really going to hit the P&L for these firms, and I think that is what's alleviated a lot of the concerns on the street regarding the rating agencies. So it's made up a lot of lost ground. Just today it's up again, 10% plus at around 720 rupees was the high of the day today. It's got another 30% to go before it catches up with the pre-fall number. But even that being said, from the low 483, it's been up 50%. Tremendous appreciation in this counter over the last month.
That certainly has been witnessed, and that's the stock price reaction as well. As you can see on your screens, a big fall, a big rise rather, is what we have seen. Care, ICRA, Crisil, all of them are gaining very, very smartly. Okay, another stock I would like to talk about from the auto space is Tata Motors. Now, they've yet not released their December sale numbers, but we're seeing a lot of traction come by. Okay, just as we speak on an intraday basis, the stock has actually cracked significantly. So now we're in the red. But in the earlier part of the day, it looked like the gaining streak would continue for the fourth straight trading session. Despite the fact that yesterday we had auto stocks that were weak, Tata Motors was actually the only one standing out. Today, however, it succumbed under the selling pressure. Now, the Tata Motors managing director expects that the company will turn around in fiscal 2021 after significantly underperforming the market this year. Now, this market was any which ways weak. We saw passenger vehicle sales shrink in double digits, since the fiscal year started back in April. And in the midst of that, Tata Motors actually saw its sales dipping 25 to 30%. So grossly underperforming the market. This all because it reduced dispatches to dealerships to help clear inventory at their end as the industry negotiated a slowdown, and also, of course, ahead of that transition to BS6 norms. But now, Gunter Bushik believes that in fiscal 2021, there will be a nice turnaround that Tata Motors could post. As we speak, stock price at the day's low. All right, well, we're going to take a very short break, but as we enter the new decade, we have Avan standing by to recap what the top leaders of India Inc. were up to in the year gone by. Avan.
Well, absolutely. I'm sure everyone's curious. What have they done in 2019? How do they plan to bring in 2021? Let's start off with Amit Burman, the chairman of Dabur India. His favorite read, Ravan, so he's going for mythology. His biggest lesson, never build a business on borrowed money. That's his key advice. The life lesson as well, it's important to stick to your goals and never change your goals. So that's what he's taking with him to 2020 as a resolution. Volunteer and give more to charity, and that's something that we all, in fact, should definitely imbibe. So that's Amit Burman. Getting to move on then. Harsh Goenka, he's the chairman of RPG Enterprises. His favorite read is a very interesting book, Yuval Noah Harari's 21 Lessons for the 21st Century. His biggest lesson, he believes, is that change is necessary in order to stay relevant. So keep up with the trends, continue to read, continue to explore, and continue to learn. One of the millennial lingo he's picked up, and I'll admit that I've not heard this one, GOAT, or GOAT, the greatest of all time. So that's something that he's probably going to start using as way of new lingo. Some of the key lessons as well for the next year from Harsh Goenka, that should just come up for you. But as of now, that's what we've got. It's been a fantastic year for a lot of startup companies. Unicorns have been built. Ritesh Agarwal, Group CEO, Oyo Hotels, has gone home a happy man. He's currently reading Chocolates on the Pillow Aren't Enough. His biggest life lesson, there is no substitute for hard work. And he also says it's very important to conquer your fears, be fearless, and take that step. His resolution for 2020 is to dream, plan, focus on a few things, and to do them absolutely well. So that's definitely advice that you want to take home. Meantime, Dipinder Goyal, we've seen the food aggregators that have been an absolute buzzer. And the CEO of Zomato currently is reading Creator Selection. His biggest life lesson, well, stay open to all sort of perspectives. So basically keep an open mind. His resolution, well, carbon neutral goals for Zomato. We've seen sustainability, being very environment friendly. All of these things are really picking up steam, and that's how Dipinder Goyal wants to usher in 2020. And Sanjeev Puri, the chairman of ITC, well, he's currently reading Exponential Organizations. That's a book His biggest life lesson, well, he's talking about health. So fitness and yoga, according to him, are essential to achieve life goals. And he believes that for ITC's shareholders, he wants to create enduring value. So I'm sure a lot of the shareholders will be happy to be rewarded with that resolution of Sanjeev Puri. These are some of the corporate titans, the big guns in the startup world. And here's a glimpse as to what they have in their diary for 2020. Back to you.
All right, thanks a lot, Avan, for that. We'll take a very short break right here on the show. Don't go anywhere. But before we do that, the RWI small case, 0.1% of gains, very minor, just aping the move that we are seeing on the Nifty and Sensex. Quick break. Welcome back. You're watching Market Fatafat on ET now. Gaurav, let's get in your take on an Axis Bank. Where do you see the stock move from here?
Yeah, Bank Nifty specifically has formed an ending diagonal pattern on the daily chart, which is a bearish pattern and has broken out on the downside in the last session. So I'm expecting around 800 points correction on the index front, even from current level. The downside 31,200 will be the key level to watch out for. So some profit booking is likely in the private banking space. And Axis Bank specifically is trading close to its resistance zone of 760, 770. Over there, the stock faced resistance multiple times in the recent past. And even today, the stock has started sliding from those resistance zone. So on the downside, the stock can tumble back to its daily lower Bollinger Band. So for the short-term traders, this is an opportunity to go short. A stop loss can be placed at 762, and on the downside, 715 will be the target to watch out for.
Okay, so that's then Axis Bank for you. It's at the day's low, by the way, as we speak. And Soumya, more trouble for Dishman Carbogen?
Well, yes, this one's again cracking in trade. In fact, a top loser on the Nifty 500 index as well. In fact, this stock got a momentary relief for a day or two, but again, this has plunged into the red zone. Well, according to the TOI report, the Income Tax Department has claimed to found a trail of unaccounted for cash of more than 160 crore rupees. In fact, the report continued to add that the senior management and record keepers of the firm have admitted to dealing in accommodation entries for unaccounted cash of the group. Apart from this, we also have another update where India Ratings has withdrawn CP rating of Dishman Carbogen, and in fact on back of this latest news, once again the stocks under pressure, lower by over 10%.
Yeah, that it is. In fact, it's locked in lower circuit now, and that's something that continues to haunt Dishman Carbogen, the IT department raids that were conducted earlier this month. Okay, moving on, Amara Raja, Varun, why is this one in focus? Edelweiss as well is quite optimistic. What's the rationale?
Right, Mabina. So Edelweiss maintains their buy on the counter. They've just reiterated that today in a note that they sent out. The target price is around 801 rupees per share, which will take its market cap to around 14,000 crores and just 1,000 crores of Exide's market cap, or just 1,000 crore away from Exide market cap. Now, what they're saying is that the auto and industrial segment will continue to do well for Amara. Now, while auto is kind of slow, remember that Exide is 75% auto, 25% other business verticals. Amara is a lot more active in the industrial segment, and the telecom segment as well. So they are hedged in a sense because their batteries go through a host of different applications. So there's no high dependency on auto. And also, the company is really well positioned financially as well. And the management has actually given outspoken guidance that they expect sales to double in the next 5 years. So the only thing to really look out for negatively that could potentially impact Amara is the Brookfield stake that needs to eventually, be handed over to somebody else, or they might exit that. So that's the only negative catalyst here. But just two interesting observations. If you study the market cap of Exide and Amara, you will see that there's never been this close. They've never been this close together. There's always been a fair gap between Exide and Amara. Now, if you also look at what's happened in the last 3 months specifically, you'll see the way Amara Raja has rallied, and Exide just has not rallied the same way. And it's quite surprising because XI has always been regarded as the leader. So maybe the fact that Amara has a hedged portfolio of battery products is why it's done better in the last 3 months when auto is slowing. We're not sure. But nonetheless, Edelweiss really positive on Amara.
Okay, so that's Amara Raja for you. At this point of time, the stock is in fact at the day's low, but yeah, quite an optimistic note released by Edelweiss on Amara Raja batteries. Okay, Skipper is a stock we'd like to talk about. We don't, talk about it too often, but yeah, it is in the essentially in the pipes business. It does cater to the infrastructure segment, of the country. A lot of B2C products as well. But now CARE Ratings has essentially downgraded the ratings of the company. The long-term bank facilities have been downgraded from A to BBB positive. The outlook, however, has been improved to stable from negative. And then you have the commercial papers where the ratings have been withdrawn, but that's only because the company said there are no longer any outstanding issues. Now, the revision in the ratings is an account of deterioration in the financial performance of the company in FY19 and in the first of FY20 as well. The operational performance was pretty weak. There was a decline in the operating income with lower sales from both engineering as well as the polymer division, and hence the downgrade. The stock price of Skipper is now down by 3% at 49.7. Okay, moving on, stock number 10, Gaurav, RBL Bank. Anything that you've observed, because 2019 has been quite a tumultuous one for this banking stock?
RBL Bank for the last 2-3 weeks is stuck in a narrow range. It is trading in the range of 350 to 330, and as a result, Delhi Bollinger banks have started contraction. Even structurally, the consolidation can continue for some more time before the stock prepares for a larger rally. Nevertheless, this is a good stock to buy from short to medium term perspective. The weekly momentum indicator is in bullish mode, whereas the daily momentum indicator has given a fresh buy signal. So keep a watch on the level of 352, and once the stock crosses the hurdle of 352, it will be set for a fresh rally on the upside. So the recommendation over here is to buy about 352 with stop loss of 340, and on the higher side 400 will be the target to watch out for.
Okay, that's a technical take on RBL. Samya, Adani Green, why is this one gaining?
Well, this one's buzzing on the fact that the company said that it has commissioned a 75 megawatt of wind power project with Maharashtra State Electricity Distribution Company and the price of 2.85 kilowatt per hour, in fact for a period of next 25 years. So definitely we're seeing some amount of stock reaction. The stock's gaining close to about 5% in trade today.
Yeah. All right. That's, of course, Adani Green for you. It's 4.5% of gains. Varun, why are you flagging Coramandel International?
It's made a 52-week high today again, and if you look at it in the fertilizer space, it's the only stock which is really trading far above its peers, and it continues to trade near the 52-week high when the entire sector is otherwise plagued by the receivables issues. So that's one reason why we're basically flagging it off. Also, Kharif output has been good, Rabi output has been good, and the monsoon was fairly sufficient this year as well, according to a lot of reports. So Coramandel should see really good offtake for their products in H2.
Okay, so that's Coramandel International. It's at the day's high, right now flattish in trade. Aster DM, look at the way that stock is gaining today in trade. A nice up move seen over here. Now, yesterday the company announced that it has made an acquisition in Abu Dhabi. They've acquired Wahat Al Aman Home Health Care. The company was incorporated only in Feb 2019. So at this point of time, the turnover, the net worth as on FY19 is nil. However, Aster says that the acquisition shall result in enhancing the company's own presence in the Abu Dhabi market. And of course, the business as well is in healthcare services. They've paid around 105 million AEDs. Of course, the actual amount is subject to change or based on the financial performance of the target. That's the Abu Dhabi company that they have acquired. But the stock price is gaining 3.37%. Like I said, FY19 was the first year, literally was in operation only for 2 months in FY19. So it's in FY20 when we will know what sort of financial performance the company delivers. Okay, Gaurav, today Adani Ports is the top Nifty gainer. What would be your recommendation here?
Yeah, the recommendation is definitely buy. Basically, the stock has formed a significant base for itself in the last several sessions, and the stock is now set for a strong rally. Basically, the base formation has taken place near 78.6% retracement of its August to October rally, and the stock is now about to cross a short-term falling trend line. When the daily momentum indicator is on the verge of a fresh buy signal. This is a good setup to buy the stock from short-term as well as medium-term perspective. A stop loss can be placed at 362, and on the higher side 410, 415 will be the target area.
Is the target price of Adani Ports that Gaurav's watching out for. Soumya, ICICI Bank, what does Citi have to say?
Mubina, this one's a really positive note from Citi. They're maintaining their buy stance on ICICI Bank. In fact, they have raised and hiked the target price from 600 rupees per share to 650 rupees per share. In fact, they continue to add that both their subsidiaries, the asset management and general insurance, are expected to see higher valuation. And in fact, in the core business also, they may see, and they're expecting higher multiples as far as ICICI Bank is concerned. So this is a positive note from Citi that's putting and keeping the stock in limelight today. However, talking about stock performance, despite this positive note, the stocks mildly losing by over 0.3%.
Okay. With that, we're out of time, so we'll wrap it up. Gaurav, Soumya and Varun, thank you for joining in on this edition. Next up is Markets at Noon.